Now questions swirl over whether China is heading for a hard landing and what that might mean for us. Let's get right to the floor show and the man JPMorgan trusts to give them the clearest-eyed sense of how the pieces of the global markets might fit together in real time, of course, Chief Global Strategist David Kelly. David, great to have you here. I want to start with the U.S. if we can. The Fed is in the fight of its life against inflation. And while Jay Powell and company are armed with rate hikes, we know that Walmart and Home Depot are learning to be way more fleet of foot, which benefits shareholders. From an investor standpoint, which side has the more powerful weaponry right now?
Well, I think that the important thing to realize is the war on inflation will be won. It's just a matter of how long it's going to take. And we've already seen inflation basically flatline in the month of July. I think we're going to get the same report for August. I don't think prices will increase at all in August. And so on a year-over-year basis, things are coming down. And even with Walmart, I mean, I don't comment on individual stocks, but if you listen to the story they've told, what they've said is a lot of middle-income and upper-income consumers are actually shopping more aggressively at Walmart because they want to try and beat inflation. So I think everyone's very conscious of inflation, but when people are conscious of it, they make moves which tend to cause inflation to come down. So, you know, I still think that inflation is going to drop off here. I think there's a lot of braking power being applied to the U.S. economy, not just by the Federal Reserve. I do think inflation is going to come down over the next year or two, and I just hope everyone's patient enough to let it come down rather than tipping us into a recession to try and get it to come down even faster.
We have seen offloading of risk. I mean, that's been pretty obvious, even as the markets have run up since June. Can you just give me a sense of how long you think that is going to last? Because at certain points, again, the markets in the aggregate have run up, but people are still nervous and they think, oh, maybe it wasn't the bottom.
Well, I think this is a healthy thing. I mean, it may well be that we have seen the bottom in the stock market. I mean, we've now recovered more than half the loss that we saw in this bear market. We were down 24%. Peak to trough, now we're down something like 11%. So we've made a lot of ground here. But what I am seeing is people thinking a lot more about valuations. A lot of companies who just don't have a business model that's going to survive or thrive in a post-pandemic environment, they're getting beaten up in the market. And I think that's actually a healthy thing. People are thinking more about what's the fundamental long-term value of this company.
Yeah, and you've got to believe, too, that as the Fed tries very hard to bring down inflation, you look at July versus June on CPI, consumer inflation. Yeah, we saw a market, actually the opposite of market, a tiny move to the downside. So maybe we're starting to see, those super hot sizzling prices come down. But are there sectors globally or here in the United States, David, where you say this is just ripe for the picking and investors don't notice it, but they should?
Sure. I think both financials on the value side and I think technology also can do very well in this environment because I think as risk comes, people are willing to take risk, I think that'll help the sort of some of the more valuable growth stocks. The thing that I do worry about, despite sort of what you're saying about the consumer, I do worry about consumer stocks because they are quite expensive, both discretionary and staples. They're quite expensive, and I do think the consumers are getting squeezed here. And so, what I think the story we're hearing from Walmart isn't really one of consumer abundance. It's really consumer penny pinching, which is really what's going on. I think that's going to continue. There's no more fiscal stimulus. The housing market is slowing. I think import prices are pretty high. I think all of these things are squeezing consumers. So I think I'd steer clear of the consumer stocks.
Do you see July housing starts? I mean, they kind of imploded. They were way lower than expected. So It does seem that there's some kind of ice-cold Gatorade being thrown on that market. But construction data here, housing starts down 9.6%. Permits down 1.3%. The expectation for the top line number was down just 1.2%, so that's kind of surprising. Housing stocks, as you look overall at the housing market, home builders, do you see any opportunity here? We got a mixed picture right now.
I think it's going to be a rough period of time here. I mean, those higher mortgage rates along with higher home prices are just causing a buyer's strike. I mean, the number that jumps out to me is actually single-family building permits. That's one of the most stable numbers within the housing reports, and that's at its lowest level since the middle of the pandemic. And I think that, just with the big increase in prices last year, the big increase in mortgage rates this year, people can't afford to buy these houses at the prices that realtors are listing them at. So you've got to have some adjustment here. I think it's going to be a weak weak housing market for some time to come here. So it's going to be a little rough in the building industry. Not, of course, like before the great financial crisis. We didn't have a building boom going on, so we're not going to get a building bust. But I think it's going to be weak for a while.
Please advise our viewers right now, because this is really important. We have, at the end of August, we're almost there, this Jackson Hole, Wyoming central banker jamboree. What do you think comes out of it, or is that just kind of a show pony type of situation? I really am very interested to hear what Jay Powell has to say there.
I think for the moment he's going to hedge his bets and try to keep his cards close, because what we're waiting to see is what was inflation in August. We won't know in Jackson Hole. What's the next jobs report going to look like? We're going to see that on September 2nd. So they're not going to have the information they really need to see. What they need to see is the economy is slowing down and inflation's cooling down. I think they'll get that message. And I think that will mean 50 basis points in September, not 75. So I think the Fed is going to turn more dovish. They just don't want to say it at Jackson Hole.
See, now the August CPI number comes out in September, and it's going to be like we're waiting on who shot JR, because that is going to be such an important number. David, good to see you. Thank you very much.
Anytime.
David Kelly,